Here we have our vertical analysis. As you can see, there is 2020, 2021. It gives us our percentages to understand the cost of goods sold, the gross profit, and everything else. Then we have the cash conversion cycle, which shows us how liquid the company is. We used all the formulas appropriately. We have the averages of inventory, accounts receivable, payable, cost of goods sold, and sales between days. Then we have the sales, cost, volume, margin analysis. We have the sales mix calculated using division. And we now know that carnes de pollo are the most sold, contributing to most of the revenue of the company. Then we know the break-even point thanks to using the variable costs and the contribution margin. And then we can move to fixed and variable costs as well. Here we use the variable cost of goods sold and the total sales. Then we got the total variable cost of goods sold. Then you got the manufacturing margin, then the contribution margin. Then we use the fixed and sale costs, and we got the income from operations. Then we move to the last part of this activity. Here we have the recommendations and the financing sources. First, we have to explain that we thought that Providencia Cocina could use a long-term source of financing. Even though short-term is also useful, it depends on their strategy immediately. We believe that they could change their budget for advertising, and they could also buy new machinery. We analyzed three banks: BBVA, which had the highest interest rate at 20%, Banorte, which had a variable interest rate, but it was still set at 16.5%, and it had a commission of 10%. Then we had Nafin, which had the lowest interest rate of 14.5%. It's fixed and has no commission cost, which is why we thought Nafin was the best external financing source in order to increase the operations of Providencia Cocina. As a recommendation, we think that yes, they should increase their advertising budget so they can increase their sales and have a bigger margin of new customers on their list of services. And they should also focus a lot on selling more proteins, as you can see on the last analysis we showed you. In the cost volume profit analysis on the sales mix, the pollo made 49% of the revenue, which is a great factor of how they could focus the business on selling proteins mostly delivered at home, which could increase their revenues, and it can give them more focus and precision on what they want. On conclusions, I want to say that I learned with this class how to analyze companies and create better strategies using different Excel modelings and analysis types, so we could create a strategy for this company, and it was very useful in this process, and now I can have a better understanding of how to perceive the numbers and how to make interpretations of them. Thanks.